right, good day everybody. This is Charles with Approved by Charles. Thanks for stopping by. I'm going to do something unique for all of you today. I'm going to show you how lenders price your mortgages behind the scenes. This is a tool that we use. I am a broker. It's going to show multiple different lenders. Every lender has a slightly different tool. A lot of lenders use a similar tool, but I'm going to use this. I'm going to run through a couple of scenarios, start with conventional, also do FHA, show you how the pricing works and how different adjustments make changes to the interest rate. So let's get this going. If we're going to do a conventional loan, we're going to do a standard product under conventional. We have multiple loan types, FHA, VA, USDA. We're going to start with conventional. Product types, standard, affordable, hero, champion, bond, etc. We're going to skip those. We're going to do a 30-year fixed mortgage. If I go here, we do have ARMs, balloons, etc. We also have access to individual terms. We're going to stay with 30 years, the most standard for a mortgage. We're going to purchase, and let's do a purchase price of $600,000. And we're going to put 20% down, so our loan to value is going to be 80%. We're going to put 20% down, loan to value is going to be 20%. It's going to be 80% with 20% down. And our base loan amount is going to be $480,000. For this example, I'm going to use a credit score of 750. Now we do use the middle credit score that you have, or if there are multiple borrowers, it's the lowest of the middle credit scores for everybody. DTI ratio, we're going to leave that at 30%. DTI is debt to income. That is, what are your debts related to your income? Simple percentage. The lower the percentage, the better. The reserves, the longer the reserves, they're better. Reserves are 401k, retirement, savings accounts, investments, whatever money that you could have access to if you need to. The longer the reserves, the better. I'm going to leave that at 24, pretty standard. We're going to have one property finance, meaning the person buying this purchase, this will be their first and only mortgage at the time. Not their first necessarily, excuse me, their only mortgage active at the time. Have some other switches for first-time home buyer, self-employed, non-occupant co-borrower, corporate relocation. Not going to switch any of those right now. We're going to do a primary residence. It's going to be a single-family detached home, one single unit, not a manufactured home. And for the zip code, we're going to do in 8004, which is the Arvada, Colorado area in Jefferson County. Switching over here, you can see there's a check here for fees in. I'm going to check that. Every lender has an underwriting fee that you can either pay as a line item or add in to the pricing as part of the fee. I'm going to leave that. I'm going to check that. Not going to do borrower paid compensation for now. That way we're similar-ish in rates to what you would see from a standard retail lender or a bank. Waive escrows is no. If you waive escrows, escrows are the lender collecting 1/12 of your property taxes, your homeowner's insurance every month. If you waive that, your interest rate can be a little higher. So I'm going to leave that as no. Keep that in the system. And we're going to go ahead and hit submit, see what happens. Now it is December 12th, 2022, so the pricing for that scenario is accurate as of December 12th, 2022 at around 4:40 p.m. in the Denver metro area. And as you can see here, the least expensive or the best rate investor is South Point Financial Services Wholesale. So again, I am a broker. I have access to hundreds. Literally, I can scroll through this. You can see lots and lots and lots and lots and lots of different lenders. If you're going through a more traditional lender, they're not going to have something like this. You're just going to have, this is what your rate is for the different programs. This is an FHLMC conforming 30-year fix. That's our Freddie Mac conforming 30-year fixed mortgage, 30-day lock, and their interest rate is, they're quoting us, is 6 5/8. APR of 6.625. So if you look at this, the APR is a little bit less than the rate straight away because they're giving you a credit of 0.204 points or $979. So that's how that works there. I'm going to do an expansion here. We'll see what these different cost changes are to loan. These are called loan level price adjustments, or LLPA. You'll see that sometimes in the news, or your lender might talk about them. So because the loan to value is between 75 and 80%, and the credit score is above 740, you are getting a rate knockdown of 0.5%, which is super awesome. And the fees in, you're adding in the fees, that is going to cost you 0.222 points, excuse me. This is a switch downward, so they are adjusting the rate accordingly. So if we scroll down here, you can see that par is essentially you're not paying points, not getting a credit, is 6 5/8. You're actually getting a small credit of $979. If you wanted to buy points, the max for a conventional mortgage, generally speaking, is around 2% in points paid. So this is going to be 1.783% in points paid. It's going to cost you $8,558 to get you down to 5 7/8. Great interest rate right now compared to the 6 5/8, which is the par. Where that's going to cost you 8,558 points in points, excuse me, dollars in points, and it's going to save you a difference of $160 a month, give or take. So that might make sense for you. It might not. It just kind of depends. Always talk to the lender. If you're working with me, I'll run through all this completely for you. I'm going to do another scenario here. I'm going to go back to modify search here, out of the way, and I'm going to change this from conventional to FHA. So one of the things about FHA, it's a little bit more confident lenders. There's insurances paid up front, so the lenders can offer a lower interest rate because there's less risk. Hit submit. You can remember our rate for par was 6 5/8 for conventional. Everything else being the same, you look right now that our rate is down to 6% for a par rate. Because we're going FHA. Again, there's more protection for the lenders and their investment by going FHA, and that's why you see the lower interest rate. So that's kind of how pricing works. Again, I can drill down into any of these, and you can see where things go green. Oftentimes you get this, a 6 3/8 costs more than 6 1/4. Go with 6 1/4 at that scenario. A lot of lenders don't like to go through and show you this stuff. It freaks people out. They worry about giving people too much information. I'm a big fan of educating people and give them as much information as they can possibly get. Again, being a broker, I have access to lots and lots of different lenders, all that can do different things. Generally speaking, though, kind of go shoot for the best interest rates. Kind of how it's going to work. Anyway, thanks a lot. Thanks for stopping by. Again, I'm Charles, approved by Charles. Please like and subscribe if you like what we're doing. Good information I'm trying to get out there, trying to be very transparent in the lending. There's a lot of misinformation about the lending industry, and I'm really trying to help buckle through that to get people to understand that things don't have to be kind of there's the wizard behind the curtain type of stuff. That really doesn't have to be the case. Thanks a lot. Have a great day.